We've all been there where we make a mistake in trading and we have a loss way bigger than what we expected. And how we respond to this loss is so important because it determines whether we develop as a trader or whether we spiral further. And situations where this can happen is, for example, maybe you've been on a winning streak. Maybe you've had like 4 wins in a row, and then you see another setup, and then you double down on that setup because now you're feeling confident. And then maybe there's like news or something, some unexpected news announcement, and you end up losing more than what you would normally. Or let's say, for example, you just don't put a stop loss in. Maybe you're trading whilst you're quite tired, or you're not in the right mental space and you're making mistakes. Maybe even you take out your stop loss because you feel so confident, or you've married a particular trade. You feel certain that it's going in a particular direction, so maybe you just keep moving your stop loss further away and take a bigger loss. Or it could be a situation where maybe you just revenge trade, you take a loss and then you double down on the next trade to try and make it back, and it turns into a bigger loss. So, and I'm sure there's many more, but I know for a fact we can all relate to those from time to time. In this video, I'm going to talk about ways that you can come back from a setback like this and reset, so that you're able to come back to your trading plan with integrity, as opposed to spiraling further and taking an even bigger loss. So let's take a closer look at a typical situation that we might encounter, and then how we can recover from this. So on screen here, I have the cognitive behavioral framework, which is based on the idea that how we think affects the way we feel, which affects the way we behave. And sometimes, depending on what's going on in those areas, we might get stuck in a vicious cycle, and which in this case might lead to inconsistency or not being profitable as a trader. So let's take the situation of the trader who has been on a small winning streak. Their confidence is high, and they're also feeling some pressure to finally make serious money. And they see what looks like a high probability setup. And instead of sticking to their usual 1R risk per trade, they decide to double their position size, maybe even triple it. They're thinking the entry looks clean, they're excited. And then what happens is the market unexpectedly reverses hard. Maybe there's like a surprise news announcement that they weren't aware of, and they take a huge loss. And instead of losing the normal amount, maybe 1% of their account, they end up losing maybe 5 to 10% of their account. So that's the situation, that's the trigger, which might sound all too familiar to you. And this triggers thoughts of, I can't believe I let that happen. I knew better. I've ruined weeks of progress. They then feel shock and fear. And this then leads to them hesitating or skipping the next time they see their setup. They might skip the trade. Or maybe even they might choose to revenge trade to try to win it back. It might also lead to hypervigilance and indecision, so really overthinking a setup, that whole idea of analysis paralysis, so really thinking about ways that they might be wrong, which leads to them not taking the trade. And this avoidance then confirms a belief that they can't do it, they're not capable, they're reckless, they'll never be consistent. And it becomes this vicious cycle. So this is what not to do. And when I say this is what not to do, I'm referring to the behavior. What you can see is that by them maybe avoiding trades, hesitating and skipping, that could lead to them missing out on good setups, trades that would have worked. And then it's kind of confirming or reinforcing beliefs that they can't do it and they're not capable, and it becomes a vicious cycle. And now this avoidance is very understandable because they experienced a large loss. So the brain is naturally trying to protect them so that that doesn't happen again. So the best way that that trader is coping at the time is to avoid it completely, because that way they're certain that they're not going to lose any more money. But now their confidence is reducing. So in the short term, that avoidance is helpful because it brings a short-term sense of relief, perhaps. But in the long term, it's reinforcing negative beliefs about their capability as a trader, and they're no longer getting the opportunity to build a body of evidence that they can trade. So in a situation like this, where someone went on tilt, one way to break into this cycle is by changing your behavior. So no longer acting on fear and avoiding situations, but actually finding an alternative way of coping. So after a big loss like that, instead of avoiding trading or hesitating upon entry, the alternative helpful way of coping or moving past this is exposure. And exposure is where you expose yourself to the situation that you're fearing. So it would mean literally taking the trades according to your rules as you were doing before. And in doing that, what you're doing is you're giving yourself the opportunity to see what happens. And you're allowing your edge to play out again as normal, as it was prior to you doubling down due to that overconfidence. And so you're gathering real data, real evidence that your strategy works again. And that data is now disconfirming the beliefs that were triggered from that huge loss that you took due to that mistake. You're now disconfirming the beliefs that you'll never be consistent, that you're not capable, that you're reckless. So if you avoid, although it feels like the safest, maybe even sensible thing to do in that moment, in the long term, that is not going to get you back on track. You have to trade again as you were before that mistake, before that overconfidence. Get straight back into it. That is the best thing you can do. Now, some people might be so traumatized, or the effects of that big loss might have been very huge on their life. So maybe that might feel too difficult to do. And in that case, you might want to then think about gradual exposure. And when I say gradual exposure, you might think of something like a ladder where you're taking smaller steps. So if you feel like you can't go back to your trading plan as you were before because you're too scared or fearful, then what you can do is perhaps grade it. So break it down into smaller steps that feel more manageable, but allow you to work towards where you were. So that might look like saying, I'm going to trade on demo for a bit, or paper trade, or size down significantly. Again, sometimes this is like the second option. If you feel like you can't go back to trading as you were before in terms of risk management and things like that, then yeah, you might consider sizing down, because now you're still giving yourself an opportunity to see that your edge plays out, and to trust your edge, and to trust yourself. But ultimately, it's about dropping the avoidance behavior and exposing yourself to that thing that you're fearful of, so that you can have the opportunity to disconfirm any unhelpful beliefs that you have about yourself, that you have about trading. So breaking into that initial loop that I showed you through changing your behavior can help you to get back on track, and you can almost view that experience as feedback. Instead of viewing it as a failure, you can view it as feedback and an opportunity to learn something and move forward. If you would like a resource that acts as a framework and a blueprint to master your psychological edge so that your technical edge can play out, please go and check out my course Embodied Trader at thetradersmuse.com. There'll be a link below or in the bio, where you will be able to go through the course at your own pace and identify your own unhelpful patterns. And it includes tools in there, evidence-based tools based on my experience as a cognitive behavioral therapist, that you can apply in real time when you're trading to help you to stick to your rules. People often find that they have the technical edge, but it's the psychological edge that is just stopping them from getting to the next stage, which is profitability. So it's a very structured course. It's not full of fluff. It's not full of psychological theory. It's really about helping you to identify your own patterns and find ways of breaking unhelpful trading loops that you're in. You have lifetime access to the course. And yeah, it's just very actionable, very practical, which I love, because that's the kind that suits our personality as traders, right? We want structure. So check out my course below. The first 5 students will get a free 30-minute one-on-one call with myself, where you can discuss how you're getting on with the course, any questions you have, anything you're noticing as you're applying the tools, and that call can be booked within the first month of you purchasing. So yeah, thank you for watching. I hope you found this helpful, and I'll see you in the next one.